You ever look at a company and wonder, is this a good investment? Well, it's not some kind of magic trick. It's all about analysis. And today, we're going to pull back the curtain and show you exactly how the pros do it. We're going to break down their process step by step using a real company. All right, let's get into it.
No, seriously, think about it for a second. You walk into a cool new store, everything looks amazing. Someone had to actually build all those shelves, the lighting, the displays that make you want to buy stuff. These store builders, they're a massive and kind of invisible part of our whole shopping experience. And today, we're making them our mission. And right now, one of the best places in the world to be a store builder is India. See, before you can ever understand a single company, you got to understand the world it lives in. For our company, that means we need to look at India's absolutely massive and fast-growing retail market. This is always step one. Start with the big picture. Just look at that number. It's almost hard to wrap your head around. We are talking about a market that's projected to be worth 137 trillion rupees by 2030. That is not just growth, my friend. That is a tidal wave of opportunity. And when a market is expanding that fast, it's like a powerful wind at your back, lifting up all the smart companies in its path. Okay, in this chart, this tells us where the real action is. Inside that already huge market, there's a segment called organized retail. You know, your modern chain stores, the big malls. And that part is growing even faster. We're talking a compound annual growth rate, or a CAGR, of over 10%. That is the sweet spot, the fastest growing part of an already booming industry. So we've got a booming market for modern stores. Perfect. Now let's meet the company that's actually riding this wave. Our case study for today, Safe Enterprises. Let's see exactly how they fit into this whole picture. So yeah, Safe Enterprises is one of those store builders we were just talking about. To put it simply, they're the people who design and build the entire inside of a store. They're basically the architects of the shopping experience, crafting the whole vibe that pulls you in and makes you want to look around. And listen, we are not just talking about boring old shelves here. They create the whole ecosystem inside a store, from custom furniture and fancy lighting to all those digital screens you see everywhere now. They are literally building the customer's journey from the ground up. All right, so this story sounds great, right? A cool company and a hot market. But here's a pro tip. A good analyst never ever just trusts the story. They always check the numbers. So the real question is, does the money back up the hype? Let's pop the hood and run a financial health check on Safe Enterprises.
And boom, right away, we find this number, a return on capital employed of almost 96%. Honestly, that is an insane number. It's incredibly high, and it's our first big clue that this business is running like a finely tuned machine. But, what does that actually mean? Okay, think of ROCE as a company's superpower. It basically tells you how good it is at turning $1 into more dollars. So for every single dollar Safe Enterprises invests in its business, for factories, machines, all that stuff, it's generating about 96 cents in profit. That is an incredibly efficient money-making machine. And here's another sign of a super healthy company. It's basically debt-free. Having no debt is like having a superpower too. It gives a company so much freedom and a huge safety net. It can reinvest all its profits into growing the business instead of just paying off bank loans. That's a massive advantage. And the growth, it just keeps getting better. Just look at this timeline. The sales are not just going up, they're accelerating. It's like a rocket ship taking off. This shows the company isn't just floating on the wave, it's paddling like crazy to get ahead of it. So, the company's strong, the past looks great, but any good analysis is really about looking into the future. And let's be real, the future is never a straight line. A smart analysis always looks at both sides of the coin, the opportunities that could make it soar and the obstacles that could trip at it. So on one side, you've got these incredible tailwinds pushing them forward, all the new malls being built, the expansion into smaller cities, and new tech that requires stores to upgrade. But then, on the other side, you've got headwinds, more competition, the risk that people stop spending as much, or rising costs for their materials. A good analysis has to look at both.
Okay, we've looked at the market, we've looked at the company, we've checked the numbers, and we've weighed the future. Now it's time for the final step, putting all those pieces together. So, what's the bottom line? What's the verdict?
This one sentence from the analyst's report, it just nails it. It's not just a story about growth, it's a story about growth that you can get at what they believe is a fair price. And finding both of those things together, that's what every analyst is looking for.
So let's break that down. What does that really mean? It means you've got a company that's not just growing fast, but it's doing it on a rock-solid financial foundation. It's that rare combo of high-octane growth potential with a really strong safety net. So after all this, what's the big takeaway for you? It's this four-step playbook. This is how you can start to think like a real analyst. You start wide with the big picture, the industry. Then you zoom in and do a health check on the numbers. Then you look to the future, the good and the bad. And only then you pull it all together into one clear story. It's a powerful process you can use on any company.
Which brings us to one last big question to think about. In a world where online shopping is king, what happens to the physical store? Is it dying or is it evolving into something totally new, like an experience, a showroom? The answer to that question is going to decide the future for companies like Safe Enterprises, and it's going to change how all of us shop. What do you think?